This is my strategy to passing problems, and I'll be providing you guys with the essentials to passing your next problem challenge. We'll be going through in this video my approach, the higher time frame bias that I use, the higher time POI, then our lower time frame entry model, and then we'll be traversing into the trade management mindset and some examples and the last few steps that you guys can take to actually implement this into your trading plan. The approach that I have is a very simple approach, and I have it this way because I don't want to constrict you guys in any way. I don't want to give you guys set time frames to focus on, but I want to give you guys the system that I use so that you guys have the option of having it as a certain time frame that you're mainly comfortable on, and you can sort of build onto this. I firstly have my higher time bias, my higher time POI, and lower time entry model. Simple as that. That is the core foundation I believe is for every profitable strategy. To our high time bias, we always have to ask the question, where is price coming from and where is it going? Where I base this off of is our order blocks, fair value gaps, liquidation, fair value gap fills, and our liquidity. Now, our order blocks, you guys are probably very familiar with this. It is just where I see price as coming off of and which we're driving price forward. Same for the fair value gap, and now with the liquidation, these are one of the more prominent ones where you then take out a certain low or any other type of liquidity in the market, and that actually have a very impulsive move to the upside. I use the liquidation and liquidity format in literally every single time frame that I traverse through in the market. And our fair value gap fills is where price is going to fall. It is a gap that we see that price should end up filling later on in the market, and we can use this as targets, and that goes the same for our liquidity too. Now, our high time POIs, we will be using PD arrays. These are the only PD arrays that I use when I use the strategy. I like, as I said, I like to keep it simple. I know there are many others, but these are the main ones that I use in the market. And what's good about it is that these two very similar, so as these two are also very similar. Now, here's our fair value gaps, our inversions, our order blocks, and breaker blocks. Not our lower time entry model. This would be the perfect scenario, the picture perfect scenario. But I understand you guys already know that this doesn't happen every single time in the market. However, I want to have this here so you guys can have this schematic in your mind, allowing you and reminding you of the other confluences that you can always add onto what you see onto the chart. Obviously, it's going to have you having that discernment to choose which order block, which fair value gap, what are you looking for, and what do you need to aim for in the market. So we are starting with a high time POI. I personally use the 1 hour time frame for my high time POIs. You guys can scale it up to the 4 hour or even scale it down to 15 minutes. It really depends on your situation, how much time you have to dedicate to the market. The next one will be our liquidation. What we are looking for before price even comes close to our area is you want to see price obviously be driving forward, right? But then as it starts coming closer to our area, we want to start seeing a slowdown. That's why I have this little consolidation right here. Okay. Now I don't want you guys just to see this only as your own liquidation that you could have. You also want to be using your eyes to look to the left of price, because there could be another high that price is just sweeping out, and then it creates sort of this little equal high pattern. Price sort of pushes, it induces traders, and then drives and takes them out. So always use the left side of the market to your advantage. Don't focus much on the present, but also use some of the historical value, because that also translates into what might happen in the future, allowing you to take better decisions. Once price has taken out the liquidity into our time for POI, we're now looking for either a market structure shift or a displacement. Now, obviously, you want to always look for the displacement, but we can always settle for the market structure shift as long as these confluences are still in place. We want to make it a point in factor that if you do not see the liquidation, you will end up being the liquidity. Now, our entries are our fair value gaps and order blocks, and then here I'll use my breaker block and inversions. Now, the main point also is that once price sweeps at this low, doesn't mean that all liquidity is done. It doesn't mean that we have nowhere else to target. Remember, we are still continuing on the higher time bias. That is the main driver, because what is the question that we ask ourselves? Where is price going? Where price is going, we are targeting. So you can always still find areas to scale in on this and continue if you didn't get this, entry. But as long as you see your entry model, you see the liquidation, and you still have your higher time bias, your higher time targets, and you also understand where price is coming from, and it's still continuing this bearish trend in this example, you can still continue targeting lower. Now, this is an example of this on the chart. As you can see right here, here's the liquidation, there was the liquidity, a market structure shift, price up into a higher time POI, coming down. Here is our fair value gap that we use, and let me show you guys the breaker block here. So you could either have gotten in also on this breaker block right over here. As you can see, price previously broke above this high, creating a push to the upside, which also left this order block right over here. So this, as you can see, it ends up failing, but now you can also use it as your next resistance. You could have, well, put it into here. Obviously, you'd usually see with something like this, price would have already, pushed quite a lot, and then it sort of come back into here and then start pushing lower. With our inversion, here we can identify there was a fair value gap that formed. So we see this fair value gap formed and it was totally disrespected. However, it does not mean that it becomes completely useless, because if we scale it out and draw it out, we see that it does act. For a moment, it does act as resistance for price to push off of. However, you could still have your entry here and then still have your same stop loss targeting lower. Yes, main part is our FEG entry that we got over here. Also, I combine with the OTE, so also don't forget that is also a very important concept. As you can see right there, price is continuing, and even if you didn't get this setup, you didn't get this initial entry, what does price start to do? It breaks lower, and then you could have looked into getting into this fair value gap and continue to target lower. If not, price breaks, and you could look into getting into this order block right over here. Into here, you go lower. But what's our main driver here? It's the high time bias, allowing us to still scale in. If we completely take out the high time liquidity, that high time bias, the target, we don't need to start looking into any other positions. We have to wait for the next occurrence of this approach. This is our trading management, the main part that will actually be enabling you to pass this account. Very fortunate position to have no time limit on your challenge, which means you do not, and I repeat, you do not have to force anything, neither do you have to rush this process. And this is why I created this trading management, allowing you guys to actually, slow down on the gas pedal, ease your foot off of it. Okay. So what I have here is the amount of trades that you're allowed to take. If you win is on one, you're only allowed one winner for the day. This allows you to avoid any greed, any overconfidence that might start to creep in. And then you're also allowed 2 losses. Now, I don't mean that you take a win and then you want to take 2 losses. Okay, guys, remember, it's 1 win a day. If you end up taking a loss firstly in the morning, and they end up taking another loss, maybe New York session, you're done for the day. Okay, you're gonna move on, and you want to just quickly backtest what happened, what you could have done differently, and then you wait for the next day, and you see the approach happen once again. Now, our risk for phase 1 will be 1%. Phase 2, it'll be 0.5%. Why? Because this is just 5% that you actually have to reach for your profit target. And mainly because a lot of the time, once you pass that phase 1, the more challenging one, you then start to have a sense of overconfidence. Yes, it is very subtle and it's sort of subconscious in your mind. And for a way for you to avoid yourself making any mistakes would actually just be lowering down the risk. Yes, you would end up having to double the profit target. However, if you're still following the same system and you're still disciplined, you end up passing that in good time. And when you are finally funded, and this is when you freshly get your account. When you have freshly gotten your account, I would actually encourage you guys to capitalize on just making small profits and getting your refund. Get that small bit of profit. I know for some profits, even add a bonus on top of that. Also get that, because now what happens, you're risk free. You can actually look into getting your next account. However, obviously, that's still for another day. But now I already see you guys is funded. But this is the risk management that I have for you guys. Now, the R that we have is 1.2.5. The most important part here is going to be our max loss in a week. We are only allowed to lose 5% in a specific week. So say for instance, Monday, you took 2 losses, so you are now down 2%. Tuesday, you don't take a trade, there wasn't any setups, good. Wednesday, you take another 2 losses, so now you're down 4%. 5%, if you were to get another loss Thursday, you're now down 5%. And that is where you would call it off for the week. You would then back test all of those trades, back test what you could have done on those days, and then also take some time off the charts to really just clear your mind. Forget about, just for a moment, those losers, those trades. Because subconsciously that will also bring us down, also bring down our trading performance, but really getting that outside experience outside of trading will actually bring up our levels and our mental judgment, which we can carry on into the next week. And our mindset here is I have a few points for you guys. You want to make sure that you starting off small. Do not go for a higher account just because you have the belief that once you pass this account, you can make X amount and you can pay this, you can get this. Start off small. And another thing with starting off small is that you allow yourself not to burn off all your cash, not to burn off all your salary just on accounts, or the last bit of money that you have just on accounts. Start off with a 5K account. I know a lot of problems have the smallest account being 5K. Start with that. If it is your first time, or you're still beginning, take that 5K account as a way for you to practice. First, pass that account and get that sort of understanding. Okay, I might know what I'm doing here. Stick to it and keep on trading, keep on withdrawing, keep on withdrawing. Once you pass your account, once you get funded, keep on trading that 5K account, keep on improving your edge, optimizing it, taking out that small profits, being grateful with that small amount that you're taking from the market. Really understand how trading really is, the reality of trading, and then you can look to start scaling up. By the end of it, you'll realize you'll fund with 6 figures. Now, you're not trying to pass this problem account quickly. You are taking your time. As I've said, you don't have any time limit on you, so you can take as long as you need to pass the account. But also just make sure to also put that 0.01 lot trade every now and then, just to make sure that your broker sees that you active. Now, do not focus on the profit target, a very big main factor. Once you start straying away from that profit target, it becomes, oh man, I went from 10%, now I have to make 12%, 13%, because now you're down like 3%. So now you're like, oh flip, I'm really close to drawdown. Now I also have to still make this amount of profit in the end. So do not focus on the profit target, rather instead focus on each and every trade, focus on each and every setup that comes to you, manage that setup, take it effectively, and then move on to the next trade. 90% of the time is waiting on higher probable setups. This is again supporting that statement of you're not trying to pass fast. Take your time with these trades. If you really want to see yourself getting a higher win rate or see yourself actually passing the problem a lot quicker, it's actually by waiting. It's a paradox, but taking the time to really wait for the higher probable setups allows you to cash in a lot more profit than taking these mediocre setups, straying away from your profit target, then sort of getting back to break even, getting a bit into profit, then sort of just kind of playing around in this range. Okay, so really just try and take your time and really wait for the high probable setups. It will take time, but it will pay off. Now think long term, think in years and months, not weeks and days. With this entire journey of problems, even though this might be your first problem or it might just be the beginning, always have the long-term understanding. Another point is you have to embrace both your wins and your losses and improve on both of them. If you get a win, do not just take it as, yes, I did the right thing, I won this trade, I don't have to look at it again. Your wins, you can have a bad win and you can have a good win. A good win is obviously high probable trade, and then sometimes even on a low probable trade, cancel big win. Maybe you miss a few steps on your initial plan. Maybe you miss the liquidation, but you still end up taking the trade. I don't even know how. I just told you not to, but you end up taking the trade and it ends up winning. Do not take that as a win. Take that as something that you have to improve on, because it's less likely for that to pan out again. Because once you get that win and you prioritize that low probable win to an actual win, it allows your brain to sort of think, okay, well, this worked, maybe it might work again, let me try it out. And slowly you'll try it out and you end up failing, and that starts to draw down your account. So even your wins, really analyze, was this a win that was according to my plan, or was this a win out of impulsiveness? Same for your losses. It's easy for us to analyze our losses, but we always forget about analyzing the win also. Last is keep testing and keep on building your experience. Your experience is your greatest weapon in any market in general. I just trade off experience. I just trade off what I've seen over these last few years, what I've seen with building my strategy. Also, I know that a lot of the times, just over practicing, so I know that this would most probably work better than maybe this other entry model. And that all comes with experience. That all comes with seeing the market day in, day out, seeing how it moves, taking those losses, learning from them, improving from them, taking those wins, learning from them, and improving from them. Okay, guys. Now let's get into some examples. Our high time bias, I'm using the daily time frame. What I see on the daily time, I can obviously see that price has been falling for quite a while. And what I mainly am looking at right now is that the fact we have this little retracement back up, all right? And as retracement back up signals to me that price is looking to get into premium zones and then pushing down lower. So I know that on the lower time frame, I can sort of catch a short move to the downside with the understanding that right now price is still driving below. We can even see with our most recent break structure that price is impulsively pushing to the downside. So I can really understand that long term, we will end up taking out this low. So I know price is going to go here, but now where is price coming from? Price is coming from taking out these highs. Remember, price took out these highs. So this is the liquidation that allowed price to drive down and continue this. Okay, I have where price is coming from. It's coming from this high. I have where price could go to next. Now go on to looking for my higher time frame POI. Yeah, I use the 1 hour time frame. Now I'll walk you guys through this. What we have here is our supply zone / our order block. Okay, so looking at this order block, you can also see that there was a fair value gap created here. But for now, we're going to actually focus on both of these two, we can also see that they start to overlap here. This is only more confidence to us, so we'll be looking at both of them. Now, what's the next step? We're going to go down to the lower time frame, and we're going to wait for price to actually come into the zone. Okay, already off of here, we can already see that there's a bit of manipulation happening here. There's liquidity below these lows. There's a bit of equal highs forming right here. But we're going to still wait. We're not going to get into the market. We're not going to touch anything until prices reach our PY. So we can see prices moving up, and it starts to come impulsively into our PY. But we're going to start seeing it slow down a bit. Okay, it's starting to slow down. All right. Okay, so it dips quite deeply into our PY here. So it dips, but we can see it started off impulsively big bullish candles, and then we started to see slowly started consolidating. Those big bullish candles started to shorten up, and it only started to grow back now when we had that purge of liquidity. As you can see here, price was taking out liquidity of these highs, and then we got our market structure shift right up here. See, price came, consolidated, created a liquidity, purged out that liquidity, and then we shifted down. Now what are we waiting for? We're now waiting for our entry. Okay, now entry is going to come from our breaker block right over here. As you can see, this demand zone, we thought it was supposed to hold, but it didn't end up holding. Does not become useless. It can still act as resistance, but we'll just take this as our breaker block. Okay, so you can see price ends up coming down, and you can see it sort of plays around here, and then finally actually comes into our zone. It's actually been tapping our zone for quite a while. It should be here. So it wasn't a quick retracement, but let's say you just have to be on your hands, quickly watching how the market's moving, then you get your entry. Okay, now let's see how this plays out. And remember, with our sugar ratio going for 2.5, there you go. You can see price completely pushes down, taking out that liquidity. Our item price is here. We know that price is coming here, but we can see we already cashed out our profits and actually took out this liquidity out of here. These equal lows from here. This lower time for liquidity. You can see there, price created relative equal lows right over here, and it purged it, and we were able to capitalize on these profits. Now, what if you missed this initial entry? Now, with where price is going right over here, I would actually look into capitalizing a bit off of this push. Price came down, and we're looking at, does it take out our high time frame bias? And it does. You can see right here, there it takes out the liquidity. So you can see, even if you didn't get the entry on top here, you could have also got a new entry from here. Plain and simple. If you're looking further into this, you can still see the schematic happening. Price takes out that liquidity, and then give us our order block here that I actually use. Here we use our order block, and then start pushing down low. Okay. So you see, guys, not picture perfect, but the main core rule is there. We are always remembering that we need the liquidation. Here's the liquidation, the market structure shift, and then we entered off of the break block over there. Here, price broke low, took out that liquidity, and then we entered off the order block. Now, next example is on NAS 100. So for all you indices traders, this strategy also applies onto indices. Now, looking at the daily chart here, I'm looking for my higher time frame bias. Where do I think price is actually going to go, and where is price coming from? Cool. Now, looking at this, we can also look to the left. Okay, you can see price is broken above a high. Cool. And we can see with the most recent candles that price has now taken out this low and has now come to this fair value gap that was previously created on the daily chart. Price took out this low, and then came and crept into this daily fair value gap. So now I know, looking at this recent price action, okay, I can see as price is coming into here, I know that most probably that price is going to end up going higher and taking out these highs right over here, if we still continue this bullish momentum that we have. Okay, so our high time bias, what is it? Price coming from the daily fair value gap, and it's going to end up targeting the daily highs right over here, because we're also pushing aggressively to the upside. So we want to continue that momentum. We don't want to counter whatever's happening. We will then now start scaling down to look for our 1 hour POI. Already looking at this candle, looking at how price came in, we wouldn't be interested in this because we want to see that at least this high get broken on the 1 hour time frame to then completely start looking for entry. Yes, you could have got an entry here, but to me, that wouldn't be as high probably as to what we have here, because now we can actually see that price is actually starting to shift on the higher time frame. And look at this, guys. Our entry model, it's fractal. It's even happening on the 1 hour time frame. Price took out that liquidity, took out the lows, right? came into, what was this? This was our daily POI. We took this maybe as our daily POI. Right, we can use the 1 hour as the lower time from here, 1 to 2, but then obviously then we actually have to use the weekly bias. Okay, so you see, comparing to where you are, you're gonna have to kind of scale up or scale down, right? So you would actually want to use the weekly bias and then use this daily POI and then use this 1 hour time frame as our entry model. This would be more the swing trading model. Straight off of here, if you wanted to, you could actually just enter the stop loss below here, give me some bit of space, and then we end up targeting out 2.5. Okay, there we go. So it's even before this high right here, that'll actually be another target for liquidity. Okay, but for more of our scalpers, we'll actually be diving down and using this 1 hour PRI right here. Okay, now what we see happening on the 1 hour, we had price push up, and now coming down to 5-minute time frame, we are presented with this choppy price action. We're not getting into anything unless you start seeing that there is been a purge of liquidity. So let us see, right, still consolidating, we're not getting involved. Okay, we see a bit of movement, but we see any displacement mark shift. Okay, there we go. We now see price pushing aggressively to the upside. This indicates to us that we need to start looking for our entry, because price is now taking out this liquidity. You can see that the liquidity under these lows that was taken out also ended up taking out this sell side liquidity. We're not really interested in that, but we are mainly interested in this mark shift right over here. Okay, so price actually came into this, pushed, didn't really give us any entry, but we are waiting now for price to reverse, and this is our time to use our OTE. Now you guys are probably also familiar with these levels. It is your 0.5, your 0.62, and your 0.7, your 0.79. Right here you can see the 0.62, it is correlating to this bullish order block, so we'd actually look to get entries right over here. If not, we could also use the confluence of this breaker block now to add to our PD arrays. Is there anything that we would like to add? I think that'd be it. Okay, so we have this breaker block and this order block with our OT. So we have now some confluence to this area. Our stop loss just a few pips below, giving it some room. And then obviously our 2.5. Now let's see what price does. Ends up coming in and then quickly taps it and starts skyrocketing to our TP. And this is just price taking out that hourly high. We still have this daily high and this daily high to price to reach, but it just shows you guys, when you are actually applying the higher time frame and understanding where price is going, it allows you to capitalize. Because yes, maybe you didn't get into this position, all right, there's still much more opportunities that happen along the way. For instance, right here, this opportunity price broke above this high, showed us that it is pushing the upside. And then look here, we have this bullish order block. We'd enter right over there, stop just a few pips below there, targeting above 2.5. And we still know that price is gonna continue to these higher levels. Now, obviously, you could tweak this and have it as you want to use it as something that you want to use to, as I can say, get a higher residual ratio. However, I wouldn't really go for that, because with your profit challenges, if you end up going for a higher residual ratio, you increase the probability of you falling victim to getting into a losing streak. And you don't have the playing ground to get into a 5, 6, 7 losing streak, right? I can see right here, price actually played a lot here, but then just missed our stop loss and then kept it going to the upside. Now moving to 80 CAD, I will say this is one of the more cleaner looking setups, but making sure we're sticking to the approach, our higher time frame bias. Now we're on the daily chart, we can see that price has been consolidated. We want to investigate why this is happening. Where is price coming from and where might it be going? Here we're gonna have to take a look at the left. We can see price is actually right now just peaked above this high right over here. Okay, so we can see that there's been a round of liquidity and it's been taken by a wick, so we can also see that price is now starting to push down low. This indication to us, showing us that price also failed to close above this high, also shows us that we have to turn away from the bullish sentiment that we had before. So to me, that indicates to me we have to start looking for sells, short-term sells. Okay, I think we actually focus more on this structure over here, so we can see price broke this low. Okay, price broke this low, and then it started pushing down from this order block right over here, came to that order block, started pushing down from it, and then we are now left with this low, having also to be stripped out. There's also liquidity, and now we have this bullish order block right here that we're waiting for price to come into. And we can see once price comes into there, We're gonna now start waiting for price to start slowing down, waiting liquidity, sweep out the liquidity, market structure shift, and then we enter. So you can see, okay, price plays around. Okay, so we can actually see price is actually not hiding its colors today. You can see it came in here quickly, sort of pushed down, but you see, look right away. We didn't have any liquidation when we came to the zone. We just came in, and look how we came in. We came in impulsively. We didn't even slow down. You see that? Maybe we slow down here, but we didn't have that liquidation, so we're not looking to enter yet. And you can see later on, price actually used this as liquidity. Now look at that, crazy series of equal highs. Cool. Now we can actually start looking for entry, because what happens, price now market shifted, and we want to enter off this breaker block right over here. Stop just a few pips above there. The same thing, 2.5 residual ratio. And look here, we even have this high time frame bias liquidity that we're targeting, and this low right here. Let's see what happens. Price missed our entry right here, guys. I already wanted to show you guys this example, because what we were expecting is that price is going to quickly tap in here and then start moving down, taking out this liquidity. But whoa, the liquidity just got swept. The high time bias got swept. What do we do now? Yeah, guys, I want you guys to go back to your daily time frame and look at what price could be doing now. What other areas could we target now? Okay, looking at this, we can also see that there's this bullish order block that price could creep into. Now we have another area that price would come into. Okay, remember, this daily order block is where we're seeing that price could come into next. Okay, so that's going to be our high time frame bias area to target where price is going now, because remember, price took out these lows, but our entry is still valid. So now we're letting price go. Okay, cool. It sweeps up the liquidity. So remember, we still have our high time bias here, and then boom, taps us in. Cool. We're letting price play on, and look at that. It finally drops down, and when it reaches that demand zone, that's when you start seeing it starts reversing. But this is how we usually expect price to tag you in and then continue. Price completely left us, but we did not foam in. We did not cancel the trade because it took out this liquidity. We had the higher time frame in mind, and we can see that it paid off. USD CAD is our next example. Same exact approach, systematic approach, rinse and peep. Now we're going to have to look to the left a bit, and we can see that price took out this draw liquidity. We can see price coming from this draw liquidity and now starting to push downwards. Okay, in this scenario, a lot of traders can see this as price coming to this bullish order block, and when the discount, is this the best time to sell? Wouldn't be foolish to sell. However, using the historical data, looking to the left, price took out this high. So when price takes out a high, we can usually expect a large run of liquidity to the downside, price distributing exponentially to the downside. So you can take this low now as just liquidity now. From becoming a demand zone, it has now become an inducement zone. It's becoming a zone and a zone of liquidity that we can now look to target. On the time frame, it just reflects what's happening on the daily. Price is breaking down lows, breaking down lows. But I want to really draw your attention to this most recent leg right over here, drawing out our Fibonacci from the high to the low. We can see that we are tapping in, that we want to see price tap into this breaker block, okay, in our discount. You can see it is above the 50%. Okay, so we're going to wait for price to come into the on our 5 minute time frame. Okay, so now what we see happen is that price is pushing into here. It's sort of slowing down, but we're not seeing that run of liquidity. Here we go. So here is our run of liquidity. Price takes out this high. So you can see here, equal highs was created. Our price took out these equal highs and starts to displace to the downside. You can see bearish candles coming in full run over here. And in this case, here we take our breaker block, order block turned breaker block now, and that is going to be our entry. So let's see what price does. You can see price quickly just taps us in. Okay, and remember 2.5 risk-reward ratio, very good. Remembering, see, we have so much magnitude of price right now. Literally, even on this 5 minute time frame, look at this. We even have equal lows over here. Our price could be coming to, right? And still, our main target is our main bias, and so that price is going to come here, is driving us to keep on selling. Okay, so we look at price comes down and then hits our TP. Okay, cool. Now let's look at what price is doing now. So what price is doing now. Let's see if we can spot anything else. Okay, we can spot that price is sort of creating a bit of equal lows. Yes, that goes to be our liquidity that is showing us that price wants to drive down lower. And we can just take a short position over here because we can see that price has respected this old block also, as well as respecting the fair value gaps there. And then 2.5, there you go, 2.5. Price is pushing all the way. But you can see how price, every single time, when you have the higher time frame price in mind, the higher time frame will do whatever it wants. But as long as you also see what the higher time wants to do, you will profit with it. Guys, that is the strategy that I use to pass my prop firm account. And this is also what you guys can apply to your next prop firm challenge. If you do have any questions, make sure to ask in the comments. But if you also want to see a simple 3-step strategy to use when you actually get your funded account, you can watch the next video.